I'd like to draw your attention to some changes that are taking place with regard to the new provisions in the Finance Act of this year on owner-employee shares. And what the government are creating is a new type of shareholder in a company called an employee owner, where they will sign a specific contract with their employer where they will actually become an owner in the company, and they will exchange certain of their employment rights in return for shares in the company. Now, there are certain safeguards in the legislation whereby the employee must formally agree to this new employment contract, and they must be offered shares in the company with a minimum value of £2,000, but there is no maximum value of shares that the employee can be offered by the employer. However, there are certain tax rules that relate to this. The first one is that the first £2,000 worth of shares that any employee is offered are free of tax and national insurance, and then the remainder of the shares will be liable to an income tax and NIC charge at the point of issue, but anything up to £50,000 worth of shares will be exempted from capital gains tax when the shares are finally sold. Now, that's the tax advantage side of this, and it all sounds very good that you can actually be awarded shares in your employer company, a certain amount will be offered to you for free, you'll have a tax charge on the balance, but then when the shares grow in value, you have a tax-free capital gain. The downside, of course, is what employment rights are you signing away? And this is where the safeguards are in the legislation to ensure that employees are properly advised, in that for such a contract to be valid, the employee must have received independent legal advice before signing. Now, the important thing to remember is the type of rights that are going to be taken away from the employee. These relate to an employee able to request study and training. Those rights will disappear. In addition, so will the rights to request flexible working arrangements, for example, on return from starting a family. The only time that you will be allowed under these new employment rights to request flexible working is within 2 weeks of returning from maternity or paternity leave, whereas normally you can request them at any time if you're a straightforward employee. But I think the biggest risk is around the receipt of a redundancy payment or limited protection for unfair dismissal. That if you sign up for one of these employee owner contracts, you will be signing away your right to redundancy payment. So the question you must ask yourself is, if you are a long-standing employee and you have built up a good level of rights to a redundancy payment, what sort of level of compensation are you receiving from your employer? What value of shares are they awarding you? For example, if you've built up a right to a £30,000 termination payment and all you're receiving is £2,000 worth of shares, you should think very carefully about whether you're going to sign the contract. And these are the sorts of issues that our clients are going to be bringing to us. And we need to not only understand the tax, but also draw our clients' attention to the fact that they do need to seek independent legal advice.